One man quietly controls one of the most powerful oil giants in the world. A company with a market cap of over $300 billion. A company that most investors know, but few truly understand. This isn't about some secretive billionaire. This is about the man running a company that helps power America. And if you own its stock, your money is riding on his decisions. The company is Chevron. It's one of the largest and most influential energy corporations on the planet. For investors, leadership at a company this size isn't just a talking point. It's everything. The CEO sets the strategy, manages risk, and ultimately decides where billions of dollars in profits go. Get it right, and investors are rewarded with stable dividends and a growing stock price. Get it wrong, and shareholder wealth can evaporate. So, who is the person making these critical decisions at Chevron? His name is Mike Wirth. He is the chairman and chief executive officer of Chevron Corporation, and he is arguably the most important figure in the American energy sector today. Mike Wirth is not your typical flashy Wall Street CEO. He doesn't seek the media spotlight or make bold, headline-grabbing predictions. His story is one of quiet, methodical ascent. Wirth joined Chevron back in 1982, fresh out of college with a degree in chemical engineering. He didn't parachute into the executive suite. Instead, he spent the next 3.5 decades working his way up through the company's complex global operations. He learned the business from the inside out, from the oil fields to the refineries, long before he ever saw the boardroom. His deep operational knowledge, forged over a 35-year career within a single company, is what defines him. It's a stark contrast to the CEOs who jump from one industry to another. Wirth is an oil man, through and through. So why did Chevron's board choose this quiet engineer to lead the company in 2018? The answer lies in the state of the oil market at the time. The industry had just endured years of gut-wrenching volatility. Oil prices had crashed, soared, and then crashed again. Investors were tired of the boom and bust cycle. They were demanding stability and, most importantly, capital discipline. They wanted a leader who would protect their investment, not gamble it away on risky, high-cost projects. Chevron needed a steady hand, someone who understood the core business and wouldn't be swayed by market hysteria. Mike Wirth was the perfect fit for that mission. He was seen as a safe pair of hands, an executive who prioritized financial returns over reckless expansion. Mike Wirth's leadership style can be summed up in one word: conservative. In an industry known for its high-stakes bets, Wirth has built a reputation for prudent, almost cautious decision-making. His primary focus is on generating strong, reliable cash flow. He has consistently resisted the pressure to chase growth at any cost, a temptation that has doomed many of his competitors. Instead of pouring billions into speculative, high-cost oil exploration, Wirth's strategy is to focus on projects with the highest financial returns and the lowest risk. This disciplined approach means Chevron might not grow as fast as some rivals during oil price booms. But the real test is what happens during a crash. Wirth's strategy is designed to protect profits and the dividend, even when oil prices plummet. It's a game plan that prioritizes resilience over short-term excitement. This conservative approach is precisely why many investors trust Chevron. The company has a rock-solid dividend history, having increased its payout to shareholders for over 30 consecutive years. This isn't just a statistic, it's a core promise to investors. Even during the severe downturn of 2020, when other oil companies were slashing their dividends to survive, Chevron held the line. Wirth's focus on a strong balance sheet and disciplined spending allowed the company to maintain its payout. This reliability is a powerful magnet for income-focused investors. Beyond the dividend, Chevron under Wirth has also been aggressive with share buybacks, using excess cash to repurchase its own stock. This reduces the number of shares outstanding and increases the value of the remaining ones, directly rewarding long-term shareholders. But Wirth's tenure hasn't just been about playing defense. He is behind what might be the single biggest decision in Chevron's recent history, the blockbuster acquisition of Hess Corporation. This isn't just another deal. This is a move to secure Chevron's future for decades to come. The crown jewel of the Hess portfolio is its stake in the Stabroek Block, a massive offshore oil field in Guyana. The discoveries in Guyana are considered some of the most significant oil finds in a generation. The oil is high quality and relatively cheap to extract, making it incredibly profitable even if global oil prices fall. By acquiring Hess, Chevron gains access to this world-class asset, giving it a new engine for production growth well into the 2030s and beyond. This single deal has the potential to redefine Chevron's entire portfolio and secure its position as a dominant global energy producer. At the same time, Wirth must navigate one of the most complex challenges facing any energy CEO today: the energy transition. He faces immense pressure from governments, activists, and ESG-focused investors to pivot away from fossil fuels. Yet, the world still runs on oil and natural gas, and global demand continues to be robust. Wirth's strategy is a balancing act. He is clear that oil and gas will remain Chevron's core business for the foreseeable future. He argues that abandoning traditional energy prematurely would be irresponsible and damaging to the global economy. However, he is not ignoring the future. Chevron is making calculated investments in lower carbon technologies. This includes expanding its production of liquefied natural gas, or LNG, which is seen as a cleaner burning bridge fuel. The company is also investing in carbon capture and storage projects, aiming to reduce the emissions from its own operations. It is a pragmatic strategy: meet today's energy needs while preparing for tomorrow's, without betting the entire company on unproven green technologies. Of course, investing in any oil company, including Chevron, comes with significant risks. The first and most obvious is oil price volatility. The price of oil is determined by global supply and demand, geopolitical events, and economic cycles, all of which are outside of Mike Wirth's control. A global recession or a sudden surge in supply could send oil prices and Chevron's stock tumbling. Then, there is regulatory pressure. Governments around the world are implementing stricter environmental rules and climate policies. These regulations could increase Chevron's cost of doing business, limit its ability to develop new projects, or even lead to new taxes on profits. Finally, there is long-term demand uncertainty. While demand is strong now, the global push towards electric vehicles and renewable energy creates a real question about how much oil the world will need in 20, 30, or 40 years. These are not small risks. They are fundamental challenges to the entire industry. So, how do Mike Wirth's decisions directly affect Chevron's stock, ticker symbol CVX? His leadership has positioned Chevron as a stable, blue-chip investment rather than a high-octane growth stock. The focus on capital discipline and shareholder returns attracts a specific type of investor, one who prioritizes reliable income and stability over speculative gains. If you are looking for a company that might double its stock price in a year, CVX is probably not for you. But if you are an income-focused investor who wants a dependable dividend from a financially sound company, Chevron under Mike Wirth is designed to meet that exact need. The stock's performance is a direct reflection of this strategy. Steady, less volatile than many of its peers, and anchored by a strong and growing dividend. Now, it's important to understand that no CEO operates in a vacuum. So who really controls Chevron? Officially, the company is controlled by its board of directors, who are elected to represent the interests of shareholders. The board has the ultimate authority to hire or fire the CEO. And a huge amount of influence comes from large institutional investors. Giants like Vanguard, BlackRock, and State Street own massive blocks of Chevron stock. Their voting power gives them a powerful voice in the company's direction. However, in the day-to-day reality of corporate leadership, the CEO still matters most. Mike Wirth sets the agenda, crafts the strategy, and executes the plan. The board and major investors are largely reacting to the vision he puts forward. His leadership is the driving force. In the end, it comes down to a simple takeaway. If you own shares of Chevron, you are not just betting on the price of oil. You are betting on Mike Wirth and his specific vision for the future of energy. You are betting on his conservative financial management, his disciplined investment strategy, and his pragmatic approach to the energy transition. The central question for any investor is this: do you trust that this strategy is the right one to navigate the turbulent decades ahead? Do you believe his leadership will continue to protect and grow your investment? The answer to that question will determine whether Chevron belongs in your portfolio.